Hi everybody. We are going to be talking about how to take swing trades on a daily time frame using the cup and handle pattern. Now, couple of things about the cup and handle pattern. It's basically a pattern where the prices have gone up to a high. They retrace here on low volumes, forming a rounding bottom, which is just like your cup. If you see here, the volumes have reduced, and as the price again starts going up, the volume start to increase. Cup and handle pattern, basically, I had to search through a lot of stocks. So this is a pattern. This is a bullish pattern, but this is not easily found because I had to go through a lot of stocks, and I have cherry picked these two stocks, Larsen and Toubro and Crompton here. And if you see here, it just appears like an ordinary pattern where you have higher highs, higher lows, and the price is respecting the 20 EMA. And what we see here is that the price basically is price is gapped down, and price is sort of consolidating here, but it's coming down, and then slowly it's going up. So the volumes have started reducing here. If you see here, the volume is high, reduces for a bit, then reduces, comes down. If you see, the volume is below the 20-day, the volume 20. If you see here, this is the 20-day average. So prices formed a cup here. I'll show you. Take the curve here, and we'll bring it here. So this is kinda your cup. Keep it here, and we keep it here. So this is a cup, and this is your. If you see here, I will just bring this here. So we get the prices in, right? The prices have to be in the cup. So we see a cup here, and if you see price is forming a handle here, I'll remove this. Can you see prices again coming down here on thin volumes? So what we'll use is we will make a handle here. From here, we make a handle here. So if you see there is a small handle that is being formed here. So you have prices that have come down, they're consolidating and slowly going up with rising volumes. And then again, you have some profit booking here. So there is a consolidation here. And finally, price is broken out of the cup and handle. Now, what are you going to do here basically? Where do you put your stop loss? Or what is going to be your exit strategy? What is your take profit? So normally what you have is you have something like the depth of the cup, the bottom of the cup to this point, to the beginning of the cup, the handle formation. I'll place a small trend line here, 3519. I'll just place a trend line here, yeah, just to give you an idea. So basically, what you see here is 11.65% move. Now, I've taken it from the bottom, center of the bottom, 11 point. It shows you in 11.6%. So this is going to be your take profit from the breakout of the handle. So from here, you are looking at a target price of, you're looking at a target here of, let me bring this chart down, there's a target of, say, 3863. So your target, potential target is going to be 3863. Make this I'll make it text target 3863.4. This is just for your understanding that I've taken the target is the price from the bottom of of the cup to the neckline. This is called the neckline. This is the handle. Now you have to take this is your target. That's fine. Now where is your entry? Now your entry, I'll just zoom it so that you guys are able to see it clearly. Entry has to be breakout. See, if you see here, the high is 3513, 3496. So it has to be above the handle. So you would probably keep an entry of 3514. Let me take a horizontal ray here. 3514. We are giving 1 rupee. Long at 3514. Make this as green. Let's make it yellow since we've taken the target as green. Long at 3514. So we are going long. I'll make this orange so that it's more clearly visible. So we are going long at, and I have to obviously change the coordinates. 3514. So here we will just extend this 35, we will extend it here. 3514. Now we are going long at 3514. Okay, so we're going long at 3514. Now what is going to be your stop loss? Your stop loss is going to be below this handle. So you will go to the lowest point of this handle and take a horizontal ray and keep it here. Now, if you see the low of the two candles, it's 3446, 344636. We'll keep it at the low of the handle here. So it will be here. And make this red. You will be below the handle here. Make this red color so that it's clear. And we'll say stop loss. Stop loss here. So your stop loss is going to be here. Now your stop loss basically, make this red, and yeah. So your stop loss is below the handle. Now let's see how much percentage is our stop loss. Our stop loss is around 4%. Yeah, rough idea. We don't want to do the maths here using a calculator, but it's 4%, so it's fine. This is where you will put your stop loss, because if your price comes below this, it has invalidated your entry, your idea for going long on the cup and handle. I will just I'll just save this and I'll do a reset chart view. So we get the proper thing here. This is how it looks. So you have your cup, you have your handle. Remember, friends, handle can be like this, handle can be straight also, but your handle definitely cannot be something which is pointing towards the sky. So you can look at this, it's like sort of a flag, the handle. What's happening here is prices again, there's some profit booking. There's some profit booking here. And now what happens is, because traders, intelligent traders like you who know how to read chart patterns, know this is a cup and handle, people will get in here. Some people will get in even during the handle formation. But we as breakout traders, ideally it's best to go above the high uh, of the handle, which is what we've done here. So the price can now go up, it can retrace a bit here, or it can continue to go upward. So people who are conservative may not take a breakout entry, they can wait basically. And if the price comes down and touches the handle here, the long entry here, they will go in for a retest. They will not go in on the breakout, meaning they won't keep a order in the system. If you keep a GTT order, it will just get triggered on the breakout itself, even while the candle is forming. Now, chances are that it could be a false breakout. So if you're very conservative, don't want to take a risk, you can wait for retracement, let the price go up, do its bit for a few days, and then you can put in an order. Don't put in an order on the first day, on the first breakout, put it on the retracement. Now, what is the disadvantage here? Price may never retrace back and you're going to lose your entry. And so, what I've given you here is the cup and handle pattern. It was very difficult to find. I just found two after going through hundreds of charts. Literally, I went through Nifty 50, Nifty Next 50. I could find Nifty in the Nifty 50 got LT, but this I got from a Nifty 500 watch list. So it was difficult finding it here, but I had to find it because that's the idea that I'm presenting here, the cup and handle. So the tip here is that it's not going to be an easy pattern. It's not going to occur as easily as a double bottom or a bull flag pattern or for example, a double bottom pattern or a head and shoulders. So I found it with difficulty, but I'm presenting it here. So you have your entry here at the break of the handle, stop loss below the handle, target, your take profit is the length of this. Remember, this should not be a very, very deep cup. And the handle also should not retrace more than 50% of the cup. If your handle goes up to here, almost touching the bottom of the cup or more than 50% of the cup, then it's no longer a cup and handle. Please avoid it. And your handle can be like this, your handle can be like this. Remember, you have a cup like this, you can hold it like this, but you cannot hold your cup like this. You're simply going to drop the tea. So please be wary of that. Don't try to force fit a pattern just because you know about cup and handle. You don't want to force fit everything into a cup and handle. Now let's go to so I hope we are clear here. Let's go to the next chart. Let's go to Crompton. Now let's see what Crompton is showing us here. Crompton basically, you see here, price has gone down and gone up again like a cup. So here we go with the cup. There we have our cup here, and their price consolidating here. So here we have something like this. Price is consolidating here. So you have your cup and your handle. Price has gone down. See, this volume is slowly decreasing. Slowly, volume starts to increase again, consolidating here for a bit. And this is the handle. And now the price is gone up. The price is broken through the handle, and you see another candle which is giving you 1.18%. The breakout candle is giving you, let's see the volume here, it's 2.6, not more than the 20-day volume, but still it was good enough to break through the handle. And then you have volume here, which again is not more than the 20-day volume, but it's giving you a decent price increase. So again, what is going to be your take profit? Your take profit here will be from the bottom to your neckline. What is the neckline? Where the cup neckline is basically your cup, the top part of the cup. So we are getting 6.9% here, and we are going to take this. We are going to take this here. So your take profit will be something like the take profit will be something like 311. So please 311. You can write something here so that when you look at the chart, you don't have to remember. Your target is 311. What is your entry point? So your entry point here will be on the breakout of this flag pattern. Flag pattern is say at the handle pattern. I'm sorry, the handle pattern. There is 293.45. So you can take an entry at 293.75. So I'll keep something like 293.75. Long at 293.75. Coordinates style, make this yellow because you've taken the target as green, so I make this yellow. So you went long above the breakout. Remember, you're not going high on above the high of this, uh, on the high of these spikes here. Okay, you're not going up the high, you're going high. We have taken basically here the candle. We've basically taken the top part of the pattern here. Yeah, if you see here, the neckline is the technical word for it. The neckline or the saucer top. So this is your cup. So you go above the high of the neckline and your target will be below the flag. So we'll go here and it will be below the flag. It's at 287.10. Stop loss 287.10. You can obviously tweak this. What I'm telling you is not a hard and fast rule. For example, I took the neckline and I added a 30 paisa here. You can add 50 paisa, 1 rupee, up to you. You can look at the ATR and then decide uh, how much buffer you want to give so that your buy limit order is executed. Because sometimes what happens is, can you see here, 291, right, is the close. Now the next candle is 292. So 135 rupee jump. There is a 135. Did you see what I showed you? 291 close and it's opened at 292, 135. It has gone down to 29125. So your order would definitely have gotten executed. But what if the open was equal to low and it remained at 292.35? And just a minute. This is uh, the high here is close is 291 and we have got 293. So we'll get filled here. So it depends on what buffer you want to give so that your order comes in. So you enter here and your target is 311. So once your order is executed, you can put in a good till traded order with a target. One cancels another order of 311 and a SL at 287. And then it's up to you. You can keep trailing it. You can keep trailing it or just keep the SL here. And once you have a movement of 2 to 3%, you can choose to reduce the SL to half of the handle, thereby reducing your SL. Or you can even bring it up to cost. I leave it up to you. There's no right or wrong here. Or and let's see how it goes in the coming days. We can all see whether it hits the target or it comes back down, then retraces. But this is what the cup and handle is. So one final time, the target is the length from the bottom of the cup to the neckline, This is the handle. We saw in LT here that the handle uh, was pointing downwards. So it's pointing downwards here in LT, but it is in Crompton we have a handle which is just like a regular proper handle, a straight handle. So these are the two types of handles you have. And while this is not picture perfect, you'll say, oh my God, this is like a well. This is not like a cup. So patterns that you see in trading books or on the net, you're not going to find them ditto like that. You may find them, but the chances are few and far between. So this is how a cup looks. This is how the handle looks. What is a cup? Cup is price has gone down, consolidated, is held here and slowly going up with rising volumes. Then again, there's some profit booking, some consolidation before the next leg up. Like a man trying to climb a mountain, since price has gone up, price is taking a breather. The human is taking the human is taking a breather at some base camp, gathering his reserves, replenishing his lost strength, eating some stuff, resting for a bit, and then again for the next day's climb on towards the summit. What is the summit here? It's 3-1. And this is your first target. And you can either sell here or you can bring your SL to here and trail and keep trailing because the price can go up. There's no limit to how big the price can go up. And of course, you have a resistance here that must be crossed. You have a resistance here as well. You have selling pressure here. Again, this is another pivot, selling resistance. But you can trail your SL to safeguard your profits, and this way you can make money. And using the cup and handle pattern, not found easily, like I told you. I found it after going through hundreds of charts, but it's a good pattern, and it's a rare pattern, but it's a good pattern, and you can make some money. Please backtest this. If you like this video, then please subscribe to my channel, share it to people who want to take trading as a business, who are serious about making money, and keep learning, keep watching, and I'll see you in the next video. Thank you for watching. Bye. All the best.